Welcome back to the What You More podcast. I'm your host, Quinton Harris. You're dialed into episode 265. Welcome to the new year, 2026. It is great to be back in the studio here. Took a little break during the holidays, spent some time with friends and family. Hope you all got a chance to do the same thing. You know, we've had some exciting news come out here on the housing front. I like to think of it as another headline, maybe as far as like a 50-year mortgage amortization. But it's another truth post that we had from President Trump regarding the possibility of banning investors, institutional investors, from buying homes. Now, why is this relevant? Why is this important? There's a theology in our industry that institutional investors are gobbling up single-family homes, and that is preventing first-time home buyers, it's preventing affordability, and it's causing more renters than it is homeowners, thus affecting the American dream, right? We all know that is kind of the goal of previous administrations, including this one, is the American dream, having people become homeowners. So sometimes when things aren't going your way, you've got to point to things, right? One of the things you point to is affordability, high interest rates, that's been pointed to, inflation, a lot of finger pointing towards the previous administration and why we got to this inflation. And then rates themselves, right? They've come down tremendously. Matter of fact, we're at some all-time lows considering 2025. We're at the lowest point of 2025. I shouldn't say all-time lows, but the lowest of the year in 2025. We got right at the very end, and we're kind of rolling into 26 looking pretty good. But yet, we're still not seeing enough traction of people becoming homeowners. So the next thing to look at is, hey, it's got to be the investors, right? And when we say institutional investors, we don't mean an investor like individuals. Like if you're a person that's buying investment homes, that's not who we're referring to. We're referring to the REITs, which are the real estate investment trusts. Companies like BlackRock that you may have heard of. Those are large hedge funds that are buying properties and putting them in a REIT so that people can invest in them in the form of like an ETF, right? If you wanted to buy into that stock, you invest in that and they go handle all the work as far as buying, maintaining. And sometimes they do commercial properties. A lot of those are in there, but there's also single family. And over the course of the last 4 years, there's been this theology that they're buying any and everything, and they're preventing homeowners from buying properties at an affordable rate. And so yesterday, being Wednesday, the 7th of January, President Trump essentially reached out and said, I'm calling upon Congress to essentially codify and ban institutional investors from buying single-family residence homes. And he said, people live in homes, they don't live in corporations. So let's talk about this for a minute. When you take a look at these institutionals that I refer to, such as Home Partners of America, Blackstone, Invitation Homes, Tricon Residential, all of these took major hits yesterday in the form of a market overreaction. A lot of these institutions took hits in the form of 7% to 5% loss in the market. And that's all based on, some things that we think we can get done, right? So let's talk about it. You look at the fact that we talked about 50-year mortgages, right? And in 50-year mortgages, we had this idea that's going to create affordability. Yes, we're still kicking the can down the road, but that was almost 3 months ago that post came out, along with that kind of push. And we talked about why it would take a major reform of the Dodd-Frank Act. It's not there. It's not going to happen. And for whatever reason, we're still seeing a little bit of lingering of that, but the reform is going to have to take place, and that's not taking place. Now here we are talking about institutional investors. Now, in order for this to be banned, there are some things that have to happen. And when you take a look at that, here's some of the things that are interesting about this. And I think that one analyst described that this was an excessive market overreaction, because single-family rentals, such as REITs, they buy a modest amount of the homes off the MLS. That MLS homes are going to be your resale homes, right? And that means I'm a homeowner, I want to sell to another person. That's going to end up on the MLS. A lot of your new builds don't end up on the MLS. And most of the acquisitions for those REITs at this point are from the home builder channels. So what does that mean? Does that mean you're going to ban them from buying from home builders? And think about it. REITs come in, buy those properties that are turnkey, and then put renters in there. And a lot of home builders have turned into these, build to rents, BTRs. So my question becomes, do you start to ban the builders from doing BTRs, right? Because what's the difference between an institutional investor and a builder that's, national, that is publicly traded? Aren't they an investor? So that wasn't addressed. And I think you're going to see some pushback from, the National Association of Home Builders, which is one of the largest lobbying firms out there. Are they going to be okay with this? And the answer is no, this is not going to happen. The answer is also that when you take a look, Redfin published a couple of data points recently that said, hey, listen, the year over year investor penetration in the market is pretty flat, right? Meaning that Redfin said that, from December's release, investors purchased about 52,000 homes in the third quarter of 2025. That's only up 1% year over year. That's pretty flat when we talk about statistics. So And if you look at those purchases only accounted for about 17% of all the U.S. home sales during that period, that third quarter, right? You could make an argument and say, well, that's 17% more that first-time home buyers could get. But do the prices fall? And the answer is no, they're not going to fall. This is kind of going back to some of the people that we talk about on YouTube that are trying to get clickbaits. They're trying to get people to buy into the idea this housing market's going to collapse. Cotality, formerly CoreLogic, released the data sets that showed that we had increases year over year from 24 to 25 in appreciation. And the forecast of 4.3 for the entire country for 2026, there's nothing being forecasted a decline. There's nothing showing that this housing market is sitting on a bubble and that it's going to decline. And again, we go back to this. I feel like sometimes we're beating a dead horse. We go back to this. Why is that? You've got demand, high demand levels, right? And if you don't believe we have high demand levels, right, because the people on YouTube want to go, there's just not enough buyers. There's plenty of buyers. This particular call to order from President Trump is actually speaking to the fact of demand. He's actually stating that, saying, listen, we've got so many first-time home buyers that want to buy, but it's because of these institutional investors, they can't buy, right? I think there's way more than that, and I'm not picking on him, but this is just one of the things that he's showing, that there is demand in the market, and we've got to satisfy that demand. The other thing is we don't have enough supply. Right? There's not enough supply on the market. If you put inventory trends and you look at them from now, dating back to 2019, obviously COVID was a weird dynamic. You go up to 2019, we're still below those levels. We're below 2018 levels. So it is not an idea of, hey, listen, we're oversupplied and under demand. It's the complete opposite. We have more demand and we don't have enough supply. You could also argue that the population and workforce has grown as well. And that's a whole nother argument and a whole nother podcast. But the reality is we have more people wanting to be homeowners than we've had before. And we don't have enough homes to supply that, which is why you're not going to see this housing crash that a lot of the doom porn guys, as I like to say on YouTube, like to clickbait and get people to believe. But getting back to this with President Trump, I think what's interesting here is that he's trying, right? And I think that's the important thing. Whether you can get it done, whether these are feasible, right? And I think there's a lot of things he's putting out there that just may not be feasible. 50-year mortgage is a great example. It doesn't mean that Bill Pulte won't find a way to get it done, but they're not going to get it done like that. It's not going to happen because of the manners that have to take place and a lot of the checks and balances that have to go with it. I believe this is another step forward, right? This is another, hey, listen, let's think about this idea. Let's work towards getting more affordability. And if this doesn't work, what comes from this? If the 50-year mortgage doesn't work, what comes from that notion? What comes from these attempts? And I think, again, it's the administration showing, listen, we're trying. We're doing things that other administrations haven't done, and we're trying to put forth an effort to have people become homeowners. And I think that that's really important. I think it's a great step in the right direction on here. Today's episode is brought to you by Texana Bank Mortgage. They're coming to the table with a revolutionary product. It's called REMLO, Real Estate Mortgage Loan Officer. And what they are doing is they are taking real estate agents and they're taking loan officers, and for the first time in history, they're putting them together under one umbrella. They're actually taking two industries right now that sit on top of each other, and they're putting them together and backing it by a full-service bank licensed in all 50 states. So imagine this, you're not just an agent anymore, you're a full-service agent. You're the single trusted point of contact for your client in this entire process. You're seeing the loan and the home search front to end. It's going to change the dynamic of real estate and mortgage lending together. Now, if you're a real estate agent, I want you to do me a favor. I want you to go to askaboutremlo.com. That's askaboutremlo.com. Because what you're going to find there are significant details about this program, how to enroll, and how to gather more information. So if you're ready to adapt and thrive, go to askaboutremlo.com. That's askaboutremlo.com. One of the things we talk about, quite frankly, on this, probably way too much on this show, is we talk about interest rates and we talk about what's the outcome of these going to be and what dictates it right now. And when we take a look at some of the labor markets, we know right now that the Federal Reserve has come out and said, hey, it is all about labor over inflation at this point. You have some Fed members that are saying, hey, listen, inflation still could get hot, but it's still labor driving it. Well, we got a recent report from ADP yesterday as well. Not real favorable. And that's the private sector, right? That's the one that drives a lot of the higher paying jobs. It didn't look real good. And then if we look at the JOLTS report, which is the job openings report, right? And this is really important because we got a real eye-opener on that yesterday. That report shows how many job availabilities or how many new postings or how many available jobs there are for people. That came in significantly lower than what was expected, meaning that there's not a lot of job opportunities, right? And then today we got another follow-up on that just this morning before we came on the show with continuing claims. That's the amount of people that have filed unemployment that are staying on unemployment. And that came in higher than expected. Those are both signs of a soft labor market and a weakening labor market. It'll be very interesting tomorrow morning on Friday when the BLS job reports comes out with the unemployment rate. All eyes will be on that. But if we continue this cadence of, expectations coming in below, you're going to see the Federal Reserve pivot. You're going to see them make some decisions that we've all been waiting on, and we're going to continue to see the 10-year Treasury go along with that. And that's important because as that 10-year Treasury drops, thus so do mortgage interest rates. And that's something that we're going to be focused on, waiting for affordability, seeing how that works. That helps people buy homes. Lowering interest rates dramatically will help people buy homes, because right now I can't tell you how many customers we talk to, they're all payment driven. You know, in our industry, everybody has started to become payment driven. Yes, it's rate. Sometimes it's always about that. But at the end of the day, it's that payment. Can they afford it, right? The intoxication of having the lowest rate, that's a personal thing. But can I afford that mortgage payment? That's what's important, right? Because if you have a 5% interest rate, but you can't afford the payment, that doesn't mean a damn thing, right? So it is always about that payment. And I think that's what we're going to start seeing some relief on in here. And there's some states where, you know, homeowners insurance is adding to that. Property taxes are adding to that. And a lot of that needs to be addressed as well. But I think when you take a look at what just happened here, and some of the direction the administration is going and some of the positive vibes they're putting out there about trying to create more affordability, they're going to get it right at some point, right? If you take enough shots, you're going to hit something. And so that's the one thing I admire about this administration. They are shooting their shots. They're eventually going to hit something to make it work. Maybe not yet, maybe not tomorrow, but eventually that's going to hit. And that's something positive. And I think it's just started in 2026. You know, we're starting to see some serious momentum amongst the administration. And let's not forget, we got one of the best Secretary of Treasury sitting in the background, Scott Bessent, who is saying, listen, I am hell-bent on getting this 10-year Treasury down in the range of 375, 385. And we all know if he gets that down there, we're going to see that magical 5 handle on the interest rates at 5.875, kind of like our friend Dan Habib described on the show 2 episodes ago. So it's there and it's exciting. And I think it's time for us to say, listen, it's going to be a great year in 2026. You know, if you look at the NBA's forecast, you look at NAR's forecast, you look at everyone's forecast, they're predicting a banner year for 26 compared to the last 2 years that we've seen. So it's exciting and a great time to be in it. Now, what does it mean if you're a consumer? Well, there's a couple of things. Number one, you might start seeing that musical chairs we've described, where you start seeing multiple offers, and now you've got to make a move. We're seeing a lot of traction right now in the new year. People have New Year's resolutions and opportunities to say, I want to go buy. I'm ready to make that move. It's time for my family to become a homeowner. They're doing it now. But if you continue to say, well, we're going to put off and wait, we're going to see what home prices do, I can tell you this. I've been doing real estate, mortgages specifically, for over 23 years. I have never met a buyer in my life, and I'm sure the real estate agents listening to this show could say the same thing. Never met a homeowner in my life that was like, man, I'm so glad I waited to buy this home. Not a one of them have ever said that. Want to know why? Because real estate continues to go up. What they say is, I'm glad I got in the home now. They never say, I'm glad I'm waited 6 months or a year. Never, not ever. So think about that logic when someone says, I think we'll wait. We'll see what happens to home prices. You don't need to see what happens. Over the last 76 years, they've gone up every single year except the greatest real estate depression that's happened, and that's a one-time thing. So it's going to go up. You can wait and see, but I can tell you right now what's going to happen. It will accelerate if interest rates drop. And that's something to think about, something to share with your clients. Hey, we're wishing you guys all a happy 2026. Looking forward to everyone's success. Looking forward to doing more episodes here on the show and bringing in some exciting guests this year. So tune in to What's Your One More. Guys, if you like what you're hearing, please share this episode. Check us out at YouTube at What's Your One More with the number 1. We're going to be back next episode with some exciting information leading into 2026. Look forward to sharing that with you guys. Till then, have a great one. We'll see you at the next episode of What's Your One More.
I got one more shot, I'm going to make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.